Last week, we expected the US stock market to recover part of its losses after a sharp fall in November 22. The equity market did gain momentum, but shortly after sank by several points. In this video review, we will figure out what is the reason for the decline and what we should expect in the near future. At the beginning of the week, the trajectory of the Dow was in line with our forecast. Last week, we said that it would grow till the end of the week. However, it declined on Friday due to market fears of possible quarantine restrictions and the uncertainty over the effectiveness of vaccines against a new coronavirus variant. Investors are seeking shelter in safe haven assets amid risk aversion. As a result, gold and bonds managed to rise. Recently, the Dow Jones has dropped to 34,750 points. Apparently, the downward movement will be short-lived and the index will eventually approach 35,500. Market experts also believe that traders' reaction was rather sharp and unreasonable. Meanwhile, the S&P 500 index is trading in the range we previously forecast. In the last video review, we said that it could drop to 4,640, which happened today. The index has already started a correction, therefore it may recover to 4,675 in a few days. Analysts are confident that the index is likely to gain momentum if the US does not expand measures to restrict travel from South Africa as well as announce a new lockdown. The NASDAQ composite remained flat last week. It was trading in a wide range between 16,050 and 16,450, which was also in line with our forecast. Currently, the index is trading at around 16,300. It may slide to 16,200 in the near future. After that, a correction is expected. Analysts say that the index is highly unlikely to decrease further, as the market reaction to negative global news was rather strong. The equity market still has drivers to resume growth. The current decline is unlikely to last for long, so the stock market may rise in the short term. Long holidays and unexpectedly negative news triggered a temporary panic, which is sure to subside soon. Let's look at the shares of some companies that have been in the limelight over the week. Shares of Moderna added almost 12%. Investors hope that the company will be able to develop a vaccine against Omicron. And the Walmart store chain is searching for a new chief financial officer after Biggs, who has worked at the company for 22 years. Walmart's shares declined by 1.6% following this news. Twitter's shares fell by 2.7% after CEO Jack Dorsey announced his resignation. He will be replaced by Chief Technical Officer Parag Agrawal. Yet shortly after, Twitter's stocks advanced as investors welcomed this change. Some shareholders have been criticizing Dorsey for spending a lot of time on other projects, in particular Square. Notably, Dorsey is a CEO of Square as well. He has also struggled to grow advertising revenue at the same pace as some other social media competitors. His failure to protect users from abuse has raised concerns among lawmakers and regulators. Do not miss our video reviews in order to stay up to date with the latest market news. Subscribe to our channel and let us know what you think in the comments down below.